Explain the context to us. $40 million, this is unprecedented, isn't it?
It is for any bank CEO, at least since the financial crisis, to give up this amount of money is totally unprecedented. It's really huge. But at the same time, there were so many big numbers being thrown around on Capitol Hill and in some publications that the number seems small by comparison. There was this sort of false expectations game about what could feasibly be available versus what actually was available under Wells Fargo's clawback policy.
Do we know how this came about? Because as Matt Levine, a Bloomberg View columnist, writes, clawbacks are a way to discipline bad employees who no longer work at the firm and therefore deter current employees from doing bad things. You have a situation where you have a current employee. Aren't there other ways to discipline you other than taking away or clawing back some of the salary?
There are, and people like Elizabeth Warren, of course, would like to see some of those other things implemented for Mr. Stumpf. What's interesting is this is still kind of a minor form of clawback. These were unvested awards that he was going to get in the future. They're not going and reaching into his bank accounts, his brokerage accounts, and getting stuff that vested to him already.
Money that has not been dispersed yet.
Yeah, exactly. So in that sense, it is sort of a nice halfway measure between more than just canceling a future bonus, but not quite, going in and grabbing stuff from. I mean, he's been at the bank and its predecessor since 1982.
He is the chairman and the CEO of the bank. Does he have a future?
That's an open question. Jenny Serrain, also a reporter, has been talking to a lot of bank analysts. They seem to think, for the most part, that Wells Fargo has done what it needs to do to move past this in terms of punishing Stumpf, punishing Kerry Tolstead. But of course, that what they're looking at is totally different than what lawmakers are looking at.
And the public as well, which is driving the lawmakers' fury. To what extent is this more about prosecuting bank CEOs for the industry's past bad behavior?
That's an interesting question because if you think about like some of the bigger scandals we've had over the last few years, the London whale, there's been a lot more money at stake, right? Like Wells Fargo didn't make a lot of money on this, but when you talk about that public anger, there's something that's just innately creepy about this phony account practice that I think is driving people to specifically target Wells Fargo for this in this instance.
And specific people can feel victimized as opposed to nameless, faceless people.
Absolutely.